Dear students, today we can take another example of accounting of shares. So we see the question: Moti Limited invited application for issuing 1 lakh equity shares rupees 10 each. That means company issuing 1 lakh shares, face value is 10 at a premium of rupees 2 per share. So they are issuing at a 12 rupees because premium is 2 rupees. The amount company was payable as follows. Company collecting from the shareholders as follows. Application time 3 rupees. This note down first. Application time 3 rupees. Allotment time 6 rupees. This is including premium. Premium is 2 rupees. So including premium 6 rupees means real allotment money is 4 rupees. Okay. 4 plus 2 6. First and final call money 3 rupees. Okay. So remember application 3. Allotment including premium 6. First and final call rupees 3. Application for 1,50,000 shares were received. So company received application for 1,50,000 shares, but company issued only 1 lakh shares. So this is oversubscription. So what company done? See, application for 30,000 shares were rejected. So company rejected 30,000 shares. It's money company refunded. And pro rata allotment was made to the remaining applicants. So 30,000 rejected means what is the remaining applicant? 1,50,000 minus 30,000 is 1,20,000. Remaining applications they are done pro rata. That means 1,20,000 applicants. Company allotted how many shares? 1 lakh, because company having only 1 lakh shares. So 1 lakh divided by 1,20,000 is the proportion, that is 5 by 6. If anyone apply for 6 shares, company will allot only 5 shares. Then excess application money adjusted towards allotment. So application time, any excess money received, company will adjust towards second installment, that is allotment money. Here one more thing is given. Giri, a shareholder who had applied for 2,400 share. One shareholder who applied for 2,400 share failed to pay allotment and call money. So it is not allotted share, applied share is given. He failed to pay allotment and call money. His shares were forfeited. Out of the forfeited shares, 1,000 shares were reissued. So his shares, because of failure to pay allotment money and calls money, company cancelled his share. Out of the cancelled shares, 1,000 shares company reissued at the rate of 8 per share, fully paid up. 8 per share means company given discount of 2 rupees. Pass the necessary journal entries in the books of Moti Limited. So here, whenever pro rata is there, it is better to make a statement like this. We already studied. Statement showing disposal of application money. Category: number of shares applied, number of shares allotted, application money received, share capital, share allotment, calls in advance, bank. First category in the question it is saying 30,000 shares rejected. Application money we received is 3 rupees. So that means category 1, 30,000 shares rejected means nothing allotted. 30,000 shares application money received, 30,000 into 3, that is 90,000. Because of rejected, complete money we have to refund to the shareholders, that is 90,000. Second category it is saying remaining, and the remaining applicants we done pro rata allotment. So 1,50,000 application received, 30,000 rejected, remaining is 1,20,000. So 1,20,000 complete pro rata means complete given 1 lakh rupees are shares. That means second category 1,20,000 shares company allotted 1 lakh. So application money received for 1,20,000 shares, 1,20,000 into 3, that is 3,60,000. Company allotted only 1 lakh shares. So 1 lakh shares application money 1 lakh into 3, that is 3 lakhs. So 3,60,000 we received, only 3 lakhs only transferred to share capital. Balance excess 60,000 we can adjust to allotment, that is second installment. We know 1 lakh rupees allotment money is 6 rupees. So 1 lakh into 6 is 6 lakh. So excess money 60,000 only. So complete 60,000 we can adjust to second installment allotment. Nothing is remaining. So whenever we are adding number of shares applied, 1,50,000 allotted 1 lakh because company have 1 lakh shares. Total application money received 4,50,000, that is 1,50,000 into 3. And share capital 1 lakh into 3, that is 3 lakhs. Excess money adjusted to allotment 60,000 and refunded is 90,000. Now we can start the journal entries. So when you starting the journal entry, first entry, journal format we have to draw. First journal entry, bank account debtor to share application money. Company received 1,50,000 shares application. So 3 lakh is application money. In this format we calculated application money received is 4,50,000. So bank account debtor to share application 4,50,000. Then second journal entry, share application account debtor to share capital to share allotment to bank, because excess money adjusted to allotment and some money rejected application be refunded. Amount how to calculate it here we already done. Share application money received 4,50,000. To share capital it will go 3 lakhs. To share allotment it will go 60,000. To bank it will go 90,000. So here total application money received 4,50,000. To share capital 1 lakh into 3 lakhs. Excess money adjust to allotment 60,000 and refunded money is 30,000 applications at the rate of 3, that is 90,000. Narration, share application money transferred to share capital and excess money adjusted to allotment and refunded. Okay. Next entry we know allotment money due entry. Share allotment account debtor. Here along with allotment what is also there in the question? Premium. So premium is 2 rupees, that is allotment money only 4. So when you are writing allotment due entry, share allotment account debtor to share capital to securities premium reserve. A company having 1 lakh shares, 1 lakh into 6 lakhs. Share capital amount only face value 1 lakh into 4, that is 4 lakh. 2 rupees is a premium, that is 1 lakh into 2 lakhs. Narration, share allotment money due and premium brought into account. Now next entry is bank account debtor to share allotment money received entry. Here allotment received entry we have to calculate because one shareholder who belongs to this pro rata not paid the allotment money. So we can calculate the allotment money received. So we have to do calculation of share allotment money received. Here we know number of shares allotted is equal to number of shares applied into proportion. Here who not in the question we can see Giri who had applied for 2,400 share failed to pay allotment and calls money. Here given applied share. So we want to find out how many shares allotted to him. So we know equation number of shares allotted is equal to number of shares applied into proportion. So number of shares allotted is equal to applied is given in the question 2,400 into proportion we already know 1 lakh divided by 1,20,000. So proportion is 5 by 6. That means those who applied for 6 share they will get only 5 share. So 2,400 into 5 by 6 is equal to 2,000. So we allotted to him how many shares? Only 2,000. But he applied for 2,400 shares. So application money received for 2,400 share. We know application money is 3 rupees. So 2,400 shares he applied for. So 2,400 into 3. That is equal to how much will come? It is 7,200. But less real application money for 2,000 shares because we allotted him only 2,000 shares. So 2,000 shares application money 2,000 into 3 is 6,000. So 7,200 application money received minus real application money for 2,000 shares 6,000 balance 1,200 excess he paid that we adjusted to allotment money. Now we can see allotment money due for 2,000 shares. What is the real allotment money? Because allotment money we know including premium 6 rupees. So 2,000 shares second installment how much you have to pay? 12,000. 2,000 into 6. But less excess money already adjusted to allotment. Already we adjusted to allotment how much? 1,200. That means out of 12,000 1,200 already paid. So balance how much is not received? 10,800. So allotment money not received for 2,000 shares is only 10,800. Now we can see allotment money due for 1 lakh shares. Company total 1 lakh shares is there. So allotment money for 1 lakh shares is 1 lakh into 6 lakhs. But less excess application money adjust to allotment. Already to application money adjust to allotment is how much rupees? 60,000 that we have written in the second entry. Right here 60,000 already adjusted to allotment. So that money we already received, that we have to less excess application money adjust to allotment 60,000. Balance 6 lakh minus 60,000 5 lakh 40,000. Then less allotment money not received for 2,000 shares. 2,000 shares how much application money we not received? 10,800 that we not received. So out of 5 lakh 40,000 10,800 we not received. Balance how much we received? 5,29,200. So total allotment money received is 5,29,200. So when you're writing in the journal entry, bank account debtor to share allotment 5,29,200 200. Narration, share allotment money received. That calculation we have to show clearly in examination. So after allotment, next journal entry is related to first call. So first call entry is share first and final call account related to share capital. Company having 1 lakh shares. In the question we know first and final call money is 3. So total first call money due is 1 lakh into 3 lakhs. Narration, share first and final call money received. Then next first and final call money received entry, bank account debtor to share first and final call. We know out of 3 lakhs, 2000 shares, Giri not paid allotment money as well as first call money. So 2000 shares, which money also we not received first call money. So 2000 into 3, how much rupees? 6000 we not received. So balance 3 lakh minus 6000, how much only first call money we received? 2 lakh 94. I am not opening coal scenario account here because question not mentioning, it is better, no need to open coal scenario account. Now then narration, share first and final call money received. Now next entry is here in the question, his shares forfeited. How many shares forfeited? 2000 shares, because he having 2000 shares. When you forfeiting shares, we know generally share capital account debtor. Here premium we have to cancel because he not paid allotment money. Allotment money not paid means premium is along with allotment money. Premium not received, we have to cancel premium also. So share capital account debtor 2000 shares at the rate of face value. Up to now company called full rupees 10 rupees, so 2000 into 10, 20,000 is the face value. Securities premium is 2000 into 2. That is 4000 is the securities premium for 2000 shares that we have to cancel because we not received. 2 share forfeiture. We know share forfeiture means how much money we received from them. We already calculated for 2000 shares allotment money not received is how much. Received is already we calculated. He applied for 2400 shares at the rate of 3. How much rupees we received from him? 7200 because he applied for 2400 shares. So 2400 to 3 application time 7200 we received from him. So how much money received we will transfer to share forfeiture account, that is 7200. Then share allotment account. How much allotment money we not received? That we already calculated. Allotment money not received for 2000 shares we already calculated 10,800. So that is share allotment money not received 10,800. And share first and final call money not received 2000 shares at the rate of 3, that is 6000. Narration, here how many shares we forfeited? 2000 shares. So 2000 shares forfeited due to failure to pay allotment and call money. Now later in the question you know this forfeited shares, 1000 shares we reissued. Out of the forfeited shares, so 2000 shares forfeited, out of 2000 shares, 1000 shares we reissued at rupees 8 per share. So when you are reissuing, generally we know when you reissue at a discount. Here 8 per share means 2 rupees is the discount. So generally bank account debtor, discount we will debited to share forfeiture account. Bank account debtor, share forfeiture account debtor to share capital. 1000 shares, 1000 into 8, 8000 rupees we received through bank. 2 rupees is the discount, so 1000 into 2000 is debited to share forfeiture account. To share capital 2000 into 10, 10,000. Narration, 1000 shares reissued at the rate of 8. You know, whenever we are reissuing any forfeited shares, reissuing any profit is there, we will transfer to which account? Share forfeiture account debtor to capital reserve. So capital reserve we have to calculate. See the question. If here 2000 shares we forfeited but 1000 shares only reissued. So at that situation, I already said this equation you have to apply. Profit on reissue of share is equal to amount credited to share forfeiture account divided by number of shares forfeited into number of shares reissued minus amount debited to share forfeiture account. This equation, remember, when we have to apply this equation, number of shares forfeited and number of shares reissued are different, but partially reissue only, this equation you have to apply. Here amount credited to share forfeiture account we already calculated. Forfeiting time amount credited to share forfeiture account is 7200. That we will write here 7200. Number of shares forfeited is how much? 2000. And number of shares reissued how much? Only 1000. Minus amount debited to share reissue time amount debited to share forfeiture account is how much? 2000. So that is 7200 divided by 2000 into 1000. Its meaning is 2000 shares we received 7200, then 1000 shares, how much money we received? Minus 2000 rupees is the reissue time discount. Balance 3600 minus 2000, that is 1600 is the profit. This profit is the capital profit or capital gain. This will be transferred to capital reserve. So journal entry is share forfeiture account debtor to capital reserve. Narration: gain or profit on reissue transferred to capital reserve. Okay. So this kind of questions we have to practice a lot. Okay, understood? The working notes we have to show very clearly in examination, because working note also possesses the marks. Okay, thank you so much.